Welcome to this explainer. Today, we're unpacking the exact, completely legal tax-saving strategies used by business owners, investors, and financial experts every single day to build and protect their wealth. Get ready, because this playbook is absolutely going to change how you look at your money.
So, what if I told you that many wealthy Americans don't break tax laws? They simply know how to use them. It's a huge shift in perspective, right? Mastering wealth isn't about finding shady loopholes. It's really about mastering the existing rulebook. You see, when you do what the government actually wants you to do, like saving for retirement or investing, they reward you with tax breaks.
To keep things simple, we've organized this into a 4-part playbook for today. Supercharge your savings, smart investment strategies, maximize work and life, and finally, master the tax code.
All right, part 1, supercharge your savings. These are the foundational accounts everyone really needs to know. The very first strategy is maxing out retirement accounts, like a 401k or an IRA. By putting your cash here, you're actively reducing your taxable income today, all while that money grows tax-deferred for your future. Think about it. You're literally shielding your money from taxes right now so it can compound faster. It's the absolute cornerstone of building long-term wealth.
Now, if you qualify for a health savings account, an HSA, you get access to what is honestly one of the most tax-advantaged accounts in America. Why? It's all about this incredible triple threat. First off, your contributions can be tax-deductible. Second, the growth is tax-free. And third, those qualified medical withdrawals, completely tax-free. It's this rare scenario where your money dodges taxation at every single stage.
And when you're funding these accounts, looking at traditional versus Roth strategies shows you exactly why the wealthy make the choices they do. Traditional means you get a deduction today but pay taxes later. With a Roth strategy, you pay the tax up front, but the magic happens later, because your future qualified withdrawals are completely tax-free. Depending on your future tax bracket, going the Roth route can be a massive legal advantage.
Let's move on to part 2, smart investment strategies. This is where we shift from basic saving to active wealth generation.
When it comes to the markets, patience actually pays off. Literally, if you buy and sell an asset within 11 months, you get hit with short-term capital gains, which are usually taxed at your higher ordinary income rate. But if you just hold on and cross that magical 1-year mark, you unlock a much lower long-term capital gains tax rate. So yeah, holding investments for more than a year is huge.
But hey, what happens when investments lose money? Well, enter this brilliant concept called tax loss harvesting. Let's say an investment drops in value. Instead of just sitting on that loss, strategic investors will actually sell it to offset the gains they've made somewhere else. Doing this can potentially reduce your overall taxes for the year. It's kind of like turning an investment failure into a strategic move.
Beyond stocks, real estate is heavily favored by the tax code. Real estate investors get to benefit from massive deductions. Take depreciation. You get to deduct the wear and tear of a property over time, even if the property is actually going up in value. Add in mortgage interest and property expenses, and real estate becomes a total powerhouse for protecting your income from high tax rates.
Okay, part 3, maximize work and life. Let's anchor these strategies right into your daily career. One massive opportunity is starting a side business. Business owners are allowed to deduct legitimate business expenses, things like equipment, software, internet, advertising, office costs. Think about it. If a standard employee pays for internet, it's with after-tax dollars. But for a legitimate side business, it becomes a pre-tax expense. It completely changes how the government treats your spending.
And you don't even need your own business to win here. A lot of employers offer incredible tax advantages right under your nose. We're talking retirement matching, which is literally free money, commuter transit benefits, and flexible spending accounts for healthcare. If you aren't maximizing these, you're basically leaving money on the table and paying more taxes than you legally have to.
Another everyday strategy is an absolute win-win: qualified charitable donations. This lets you support the causes you really care about while also potentially reducing your taxable income. It perfectly shows how the tax code incentivizes behavior that helps society. You do good for the world, and as a bonus, your tax bill actually goes down. Finally, part 4, master the tax code. This is the ultimate professional strategy. Look, to keep all these moving parts optimized, you really need to work with a tax professional. Tax laws change frequently, and they are wildly complex. Many wealthy individuals use CPAs and tax advisors to pinpoint those legal deductions and credits they might otherwise miss. It's an investment that pays for itself over and over again.
So, the crucial mindset shift I want you to take away from this explainer is right here. The goal isn't to avoid taxes illegally. The goal is to understand the tax code and use every single legal advantage available to you. It's about playing by the rules, but making the system work for you, not against you.
I'll leave you with this provocative thought. What could you build for your family, your future, and your community if you legally kept more of what you earned? It's entirely possible when you know the playbook. If you want to keep expanding your knowledge, make sure to subscribe to Money Mastery for more personal finance, investing, and wealth building strategies. Thanks for joining me on this explainer, and I'll catch you next time.